Fantastic. And we are now live. Hello, everyone out there. This is Andrew Berman from National Mortgage Professional Magazine. Thank you so much for joining us for another NMP series that we're doing called the Leadership Series. With me today, I got my good buddy, Shashank Shekhar, who is the CEO of Arcus Lending and the creator of MLO Masterclass. Shashank, thank you for joining us.
Thank you, Andrew. It's always a pleasure to be on any of your shows, so I look forward to it.
So listen, I want to talk, I want to get into a little bit about, with obviously the new norm, everything actually that we've been going through. But I want to start off on a positive note, and let's start off actually on I want you to brag and talk a little bit about this. So first off, if those of you don't know, Shashank has only been in the business since 2008. He got into the business, which was one of the worst years until recent times, where in the mortgage industry, 2008. I'm sure there are a lot of people that would have said you're crazy for getting into this business, and especially since he had no contacts in the mortgage business on the origination side of the business. He came to this country, he had 3 friends and $1,000 in his pocket, and he got into the mortgage business. And it's clearly working. 2019, was it 617 transactions?
That's correct, yes, for $235 million of production.
Phenomenal. And he did that not with a team of 20. He did that only with, which I think is phenomenal, 3 processors, right?
That is correct, yes.
Yeah, and he actually has an unbelievable, from the initial application to dealing with any kind of conditions that come up, to just helping through any closing problems. Shashank is all over his borrowers. It's not like he's just doing the initial contact and passing the baton. He's actively participating in each one of these loan transactions. And so in the month of March, with all the chaos that's been happening, how many loan applications did you take?
I think I have lost count, frankly, but I think we are at about 120 applications for the month.
Phenomenal. That is absolutely phenomenal. So, I mean, what is going on in the mindset of the borrowers today? Because I mean, so listen, we just talked 3 days ago, and you were at 100 transactions.
Yes.
So that means you did 20 transactions when the world is falling apart. The sky is falling. So what is going on in the mindset with the borrowers that you're talking to?
You know what, frankly, what I hate about this market is that until before this, I could brag that I got in the business in the most challenging year for financial markets. And I so hope that does not change this year, is that it's probably a 60, 90 days thing, and we kind of go back to about 80% normalcy, so that I continue to brag that I got into the business in the most challenging year. Having said that, a lot is going through really borrowers. I think this is the time when we need to be over communicating. We need to be talking about everything that's happening in the market, almost pretty much live, and letting them know what's going on. They're thinking about, of course, on one side, they're thinking about, hey, these are probably the great times to lower my interest rate or lower my payment. But at the same time, they're worried about, as in, will I have a job by the time I close on refinance? As in, do I want an appraiser to come inside my home? Do I want a notary to come into my home and these are the questions that I'm getting on a daily basis. So you started the call by saying that I don't just say take the application and send it to processing and let them handle the loan from there until the end. In fact, I let them handle it until there is a problem. And these are the problems that I have been answering the most over the last, I would say, week and a half, where the loan is going fine because, of course, I have a processing team, which is probably one of the best in the country. But they have these questions. They're like, okay, I don't want the appraiser to come inside my home. I have 3 closings tomorrow for one person who is in Colorado, and he's saying that I probably don't want the notary to come in. And a couple of those are jumbo loans, and we know that the securitization for jumbo is pretty much evaporating as we speak right now, which means a ton of lenders are pulling out of the jumbo loans. So I had to let him know, as that's totally fine. I understand it. Just so you know that these loans may not be available starting Monday. So if we pull out now, we might be out for weeks, if not months, before these products can come back. So you're trying to do good for the borrower while trying to understand that where are they sitting? What kind of fears do they have? And can we overcome that? And that's very important. And that's why I've been, in recent times, I've been very active with my blogging, again, trying to address both my consumers, of course, my own database and future consumers, but also trying to help out the mortgage community by sending them these blog posts saying, hey, loan officer, try to use the content here and talk to your clients and then tell them what's going on in the market.
Yeah. And talk a little bit about that blog post. So now, by the way, Shashank has been blogging since 2008, probably actually in a time actually where most of us did not do anything with blogging, and it was a relatively new medium for a lot of people, and it's just not something you did. And he was just unbelievably successful with that. But talk to us a little bit about this blog post that you created that I thought did a really good job of explaining what we should be saying to our borrowers. It's kind of like I felt a little more high level, not necessarily just the borrowers, more for like the originators. Probably something I'm guessing you originally wrote it for your broker or your originators that work for Arcus Lending.
Yes, there has been dual motive on writing these blog posts. I typically write blogs which are direct to consumers. And as you know, I've been blogging since 2009, when probably there were less than 10 mortgage originators who were blogging. So we consider ourselves the OG group. We still talk to each other, and most of us are still blogging, which is a great thing. But really, so for me, a lot of my personal branding was built around blogging in the days when nobody else was. But of late, the blogs have been directed or have been meant for the consumers, of course, but also for loan officers who work at Arcus Lending, because they have their clients, and I want them to make sure that they're communicating and educating their clients. And also a ton of loan officers on MLO Masterclass, which is an online training program that I run, and also some of the other platforms or the Facebook groups that I'm part of, because this is my way of giving back to the community, saying, look, I know that my borrowers don't know what's going on in the market or very confused by it. And I'm sure that your borrowers are thinking the same. And here's a blog post that you can send to them. In some cases, I have even given them right, like, for example, MLO Masterclass members have the complete right on even claiming authorship for some of this stuff. You don't have to say this comes from Shashank. You can just say it's coming from you. I don't really care. I just want people to know what's going on in the industry and be prepared for it, because I don't want the overall industry to look bad because we did not do a good job of educating our clients. I came in the business in 2008, and I've seen this unfold in the worst possible way. And I would personally do everything that I can in 2020 not to make that happen again.
Interesting. So you are a mortgage broker. You've been actually a mortgage broker all the time. Do you feel actually that being a mortgage broker, helps or kind of hinders your ability, in markets like this?
I have been on calls with my loan officers, again, more regularly than I've ever been in terms of doing team calls and everything. And in every call, one of the underlying statements have been the fact that thank God that I'm a broker in this market, and I have access to, say, 60, 70 different investors. So if, say, Quicken comes tomorrow and say, I don't want to lock in this market because of whatever, or investor B comes back saying, I have a liquidity problem and I can't price my loans competitively in this market, I care a little bit, because of course, I think it's not a great thing that if one of my lenders are going through a challenge, but then I have 58 others or 68 other investors that I can go to. And that's something which has been such a relief in this market because of the stress factor around, is there enough liquidity with every single lender? And we know that that's not the case. There are tons of lenders struggling either with warehouse line of credit problems or just margin calls on their locks. And the fact that I can move from one lender to the other if one has a problem has been game changing for me. And that's why when you said that when the borrowers are confused, the market is confused, and I'm pushing in the locks, is because I'm looking at, okay, lender A is not working in this scenario, but the lender B is. And sometimes lender B could be good for 30 minutes or an hour, and then they pull out, but I'm fine, then somebody else comes in. That's the beauty of it. If I was working for just, say, one lender and they pull out of a certain product, and I've been hearing that from retail loan officers, I've been having more conversations with them than ever before. And they have the same problem, is that there are certain products where they're so much out of the market is that they can't really price competitively. But I have that advantage where if A is not, I can go to B or C.
Yeah, no, listen, I just interviewed Austin Nemick from QLMS, and he talks about, this is his phrase that he goes around, is options are mortgage brokers' big superpower. Yeah, and that's basically that what you have. And so if one of the lenders poops the bed, you've got 14 other lenders that you're hopefully signed up with already, and that's great. And especially listen, we don't know what's going to be the future, and obviously as you grow, because I mean, right now, let's talk about your platform specifically, Arcus Lending. What does it look like? How many originators do you have? How many states are you licensed in?
So as you know, Andrew, as in you and I go a long way back, in that for a long time, I kind of stayed away from recruiting loan officers. I had a personal goal. I wanted to touch that goal as a personal producer before I went out recruiting. And this is something that I'm a huge advocate of, is that just because you do 4 loans a month, you should not go out and start recruiting people. That's when you start doing that, that's when you are 25 years in the business and still struggling, is because you don't have your own personal production at a point where you are super comfortable about your financials. So that's one advice right there, is that first be very, very comfortable that even in a super bad year, that you can close a minimum amount of business, which will be good enough to let your business run and let your family run. So I had that more personal goal, which was closer to $200 million. And I kept saying no to dozens of loan officers who wanted to join the team. But when last year I changed that, and because I could see that I'm getting towards that personal production goal. And also I could see that I'm at a point where I can actually add value to other loan officers. I hate people who could just get loan officers because they run a company and they have a license and they can get a percentage of somebody else's commission without really adding value to anybody else's business. My goal had been very different. When I went out in the market and said, hey, I'm ready to have loan officers join my team, I did several things. And I literally invested my entire profits of last year into building the systems and the processes and the operations and the technology, built MLOmasterclass.com, which is a training product for outside loan officers, but also for my own loan officers who join Arcus Lending. So I built all of that to create a platform where a loan officer can come in and feel that this is probably the last move they will ever have to make. And so I'm very, very proud of that. And now we are at what we started recruiting around this time last year, around May, June of last year. We are at about 50 loan officers right now in less than 12 months. And we seem pretty set to get to about 100 by the end of the year.
So one of the things I wanted to talk to you about is, like what are you seeing with your other loan officers out there? Because listen, you're a fearless guy. You have the confidence that you're able to instill that with your borrowers that you're working with. But not every one of your originators are superstar originators that's closing 617 loans a year. So what are you telling them? What are they saying? Like, how are you helping them keep positive? And not actually like coronavirus positive.
Sure, more like corona positive, not coronavirus positive.
Yes. Yeah.
So the reason why I am in a better situation than a lot of, say, CEOs or owners or founders is because I am doing this every day. I am hearing from my borrowers every day. I'm exchanging those emails. I'm having those conversations. So I know exactly what the borrowers are thinking. I also know exactly what the loan officer is thinking. I said, I was personally extremely confused by not this week, but the last week, how the MBS was behaving. So I did my own research and everything. But really what I'm telling my loan officers, and I was telling you this before, is that I'm having more conversation with them right now. I'm having more team meetings than I ever had before, is because, again, as the leader, it's my job to figure out what's going on and then pass it on to them, which they can then pass it on to their clients. So a lot of times it's not so much about whether it's bad news or not, it's about how quickly you communicate it and you explain why there is a bad news and could there be a good news, and when would that be? And if you are able to do that, and that's the same philosophy, even if, say, something were to go wrong while you're working on a transaction, if appraisal came low or the loan got declined, it's like how quickly you get to that news and then how quickly you can come up with a solution telling them, hey, this is my plan B and this is how I'll help you. So my big thing in this crisis has been communicate, communicate, communicate. And here are the resources. Here are the blog posts. Here are the Zoom calls. Here are the trainings. Here is mlomasterclass.com. All of that platform is available to you as a loan officer of Arcus Lending, which I'm using on my customers and it's working, and you can go and use on your customers.
So, and take us through actually, what does your digital experience look like? So what does a borrower go through? Because it's from pretty much actually like from December to March, it really hasn't changed because most of your borrowers, you're not meeting in person. There's no, you're a complete. So talk to us a little bit about this, about your process.
The entire thing about remote working and social distancing and everything, I kind of joked on one of my Facebook group. I said, I've been practicing social distancing since 2008. I've never taken a loan application in person.
That's awesome.
So it's a new concept for a lot of people, but I have truly actually been practicing it for a long time. So from my very first application to the last one that I took this morning, I didn't actually take it. They completed it online. So that's for me. And 5 years back or 6 years back, really, we went completely paperless with everything in the cloud. My business model, even though we were only a 4 or 5-person company, was always the fact that we should be able to work from anywhere in the world, not just anywhere in the US, but anywhere in the world with very little disruption. And so we implemented Dropbox, we implemented point of sale, we implemented everything, the email in the cloud and everything. And then 2 or 3 years back, we started implementing a Skype and Zoom because now we have employees who are in 8, 9 different states, and we effectively communicate via all those platforms. So for us, remote working is zero disruption. If anything, it's probably making us more productive because we have been used to doing business this way. We have had technology that or digitization of everything in the past. And so we are not surprised. In fact, I was talking to KP at PRMG, and I was telling him the one thing that really pisses me off is the fact that we have not been able to do e-notarization in all 50 states. That's the last bottleneck, really, as in my entire process. The only time my borrowers have to meet someone in person is either appraisal, which sometimes you get a waiver and you get away with that, but really the notary, as in you can't get away with it. The notary has to be in person signing you, and thankfully there are, I think NAM is taking the initiative to get more petitions signed and get more e-notarization in all 50 states. And I'm hoping that the lawmakers will actually look at something like this as an opportunity to get that passed at the national level so that all states implement it. But that's really the only bottleneck or only roadblock in my so-called 100% fully digitized mortgage experience, because that's a part that I don't control and I have to live with that right now. But I've been prepared for that. I'm not saying that I saw this coming. Nobody saw it. But I've seen it in the sense that I was always ready for disruption, in the sense that if something were to happen in the building or wherever we are working, I can work from anywhere I wanted. Yeah.
So, I mean, it's interesting to see actually that there are a lot of companies who I'm talking to who are just, they have their plans have been in place to be able to address this. And some are just, they're already remote working. They're already actually, as virtual as they could possibly be. And I think actually one of the good things that of course, all the bad things that we're going to be facing here, but you know, our industry, reacts actually, in makes paradigm shifts when outside forces cause us to do this. 2008. I mean, obviously the meltdown that we had, while that was, could say the more of the industry's fault and Wall Street's fault and really credit agencies, but that was actually something that brought us to be a place that is obsessed, or an industry that's obsessed with customer experience. So like that was the big thing. I mean, so much that you have, companies like Social Survey can put on an entire conference dedicated to people that are just obsessed with customer experience. And this is why, your process works really, really well for the kind of customers that you're bringing in, that you're able to give them that full digital experience that they love. And now actually it's going to just take that and require the entire industry to do what you've already been doing, and then address that last piece, which is actually that notarization piece, which, that's the one of the good things that comes about. And of course, that we get to spend more time with our family. And I don't know about you, but I know myself, I've been hanging out with my family more. I've been spending more time with my kids, with my dogs, with my wife. How has your work-life balance changed? Because, and so here's the cool thing, and I know Shashank's story really, really well. He only works 9 to 5. He only works 9 to 5. He barely works on weekends. You can catch him on some work stuff, but for the most part, it's like 9 to 5. He actually takes vacations. So talk to us. How's that work-life balance carried over now that actually you're working from home?
So yeah, and I guess this entire setup of working remotely, which was done a long time back, was kind of a way to let me take my vacations and work from any place in the world I was vacationing to. So it was kind of done to fulfill my need. But really, you're correct. As in I wouldn't lie. Last 3-4 weeks, I have been working after hours, have been working weekend. It's just the craziest time that I've seen in the industry since I got in the business 10, 11 years back. And now it's not just me. I have my team members that I need to take care of, because they are, of course, way more confused, or they are way more pessimistic than I could be. So it's my job as a leader to make sure that they are calm and they know what they're doing. But really, as in working from home again hasn't been that big of a challenge. Of course, I have two little kids, so I have the same problem that say any dad would. But that's just part of life. As in, I would encourage everyone who's watching this is to take that in a positive way, where you get to spend more time with your kids. As in when else would you get to do that? And you could still work when they go to bed, as you can work for 2 hours in the night after they're done, and then you could work on your urgent stuff then, whatever, reply to your emails and come back in the morning and still give them some few extra minutes. That's all that they're asking for. And I have no problem with it. Of course, my business is geared, as I said, to work remotely, so there is no challenge to that. But I would strongly encourage that. Look at it from the positive mindset. Look at it from the point that you are getting to spend more time with your family, and actually use it that way, instead of being annoyed or frustrated with the fact that there are constant interruptions. That's just part of life right now, but it's in a good way, and that's how I'm looking at it.
Right. So one of the messages just came up. What advice do you have for us? What's the biggest takeaway you found so far with your experience with this crisis? Like, what's your biggest takeaway? And I know you've basically, it sounds like you haven't really changed much besides the fact actually that you're working more hours. But talk to us about any takeaways that you have from this.
So a couple of things is, one is that communication. What I've noticed is that, and I have kind of seen that with every problem that I've had during my 10, 11 years of career in the mortgage industry, is that I've seen that I've been able to solve pretty much every problem with communicating to different parties, whether it has been closing delays or loan getting declined or something that came up with the process that we did not expect. We were able to solve pretty much 100% of those problems by communicating to the parties, communicating in a timely way, telling them what's going on, what they can expect. And it's the same philosophy, or it's the same thing that applies even now, is that the more uncertain people are, the more unpredictable the future is, the more you need to communicate as the leader. And you could be leader either of just your own business, or you could be a leader of running 500 people business, or whatever it is, or just your consumers. You are technically the leader for them because they are looking up to you for that advice. So for me, the biggest takeaway has been is that you need to communicate more. And if you don't know what to communicate, then you need to listen to the experts or the leaders who are telling you how to communicate in this market. For me, that's been the biggest takeaway. And in terms of advice, really, irrespective of the size that you are at, be out there more. As this is the time when people are actually tuning into social media. People are spending more time on their cell phones. They're spending more time consuming information. So if you're out there, you should be seen more. This is the time actually to take market share and not just to be sitting there confused and being worried about your future. And by that, what I mean is that you should be creating even more content. You should be educating even more clients. You should be reaching to your database, because instead of them finding information from CNBC or Fox or CNN, you should be the person informing that, because this is the time to build that market credibility. This is the time to build expertise. I came in this business in 2008, and I've experienced this firsthand, is that when I was able to educate and I was able to teach and I was able to write blogs and speak about topics that nobody else was, I created that market leadership. I created that expertise platform, which has brought me here. From 7 loans in my first year to 635 loans last year, or 620 loans last year, has happened because I spent the first 2-3 years into building that credibility. And in a market like that, you get more opportunity than in a market where nobody's confused and everybody's happy and nobody's looking for information. This creates great opportunity for some of us.
Yeah, it's time to, it is time to absorb what the leaders are saying and share it with your community. Create, as it's appropriate for your community, your organization. As Allison just said, lean into social media. Like use it, make it actually something that's part of. It's interesting. So talk about the new norm. My daughter just handed me a spoonful of peanut butter. Now, if anyone would have come anywhere near me in my house, like 3 weeks ago, I would have freaked out. And so it's just funny how the world has changed. And then Melissa just wrote, we need more strong leaders like you. Agree. Do you have any tips for those who are working remotely? So I want to talk to you about that, because you're the master at productivity. Like, there's no question about it. The fact is that you're able to get done everything that you're able to do, that you're able to originate that amount of loans, only work, 8 hours a day, present time, not including, the fact that you spend time with your family on the weekends. So to me, actually, that's just awesome. So I want to talk to you about actually the work at home. How do you keep discipline? How do you stay productive? Because it's just phenomenal. You are the most productive person that I've ever met.
I think the principles remain the same. It's how you structure your day. So when you start your day, you need to be very clear in terms of what you need to get accomplished. If you do that, and then I don't know, Melissa asked the question.
So Melissa said, hold on for a second. Need more strong leaders like you. Do you have any tips, like for working remotely? Like how, are you as efficient when you're working at the Arcus headquarters, versus working, in your home?
No, and see, the thing is that, again, that's what I was saying before, is that when I'm working from home, my priorities are not just that I need to get my work done. My priorities are also if kid walks in with a spoonful of peanut butter, then I'll eat it. I will not say, hey, I'm on a call, just go away from here. It's because I want to relish those small moments. And I have had my little one walked into a Zoom call that I was doing 2 days back, and that's totally fine. It's like when you are at home and you have kids around you, that's just something that you should expect that will happen. And if other people around you on a Zoom call or something, they don't acknowledge it, that's their problem. That's really not yours. But yeah, are you equally productive there? Probably not like 100% of the time, because I might have my 6-year-old sitting by me doing her own doll game while I'm trying to sell someone a certain interest rate or whatever. So you don't. But at the end of the day, I still in the morning I'll wake up earlier than everybody else, because then I get my 2 hours even before my two kids wake up. And in those 2 hours, I've taken care of all the overnight emails, pretty much anything which is urgent at that point of time. And so after that, it's more becomes transactional in the sense that, or if I have to write a blog post, for example, the third blog post where I got like 16,000 hits on that blog post, I woke up Saturday morning at 6:30 when probably nobody was doing because it was a sleep-in time for me. But I still woke up at 6:30. By 8:30, when my kids woke up, I had 2 hours to research, write the blog post, syndicate it, got all of that done. I was already feeling great by the time they woke up. So I'd done the urgent, more time consuming thing by then. And that's how I typically play it, is that I either I wake up early so that before they wake up, I'm able to do a lot of work. And then after I sleep around 9:30, 10, then I'll work through 11, 12 or whatever, again, get myself an hour and a half of solid work there. So I basically give myself about 3.5 hours without the kids, and then another 4, 5, 6 hours with them, where I already know that I will be distracted, but I've already factored that into my calculation and still get all the important stuff done.
So do you actively prospect, or are you more like putting content out there and letting people come to you?
So I stopped actively prospecting sometime last year. And again, even my active prospecting has been more about content creation and doing maybe a few real estate agent meetings or doing events, than so much about daily prospect calling or something. That has never been my thing. As I tried doing everything that most other loan officers do in the first 12 months, and I miserably failed at it, like going to networking events or making calls and all of that, really all of that. I also have tried a ton of mortgage tools that a lot of people sell out there. And none of those worked for me. And of course, it was also a bad timing. It was 2008, 2009. And I was probably really bad at implementing it, but whatever the reason was, I was probably not cut for it. And so from there on, as my entire focus has been to build a business where people come to me versus me going to people. And that's why my focus on content creation and personal branding and building that expert platform and giving that customer service has always been at the forefront and the pillars of my business, is because I can get into a market like this and still be very comfortable with the fact that, as in worst case, I'll have 60 bad days, but I'll live with it, because overall I've got the fundamentals dialed in, and I'll be fine in the long run.
Interesting. So personal branding, super important. Get that out there. And now listen, the approach that you took to this business is the long, complicated, most difficult way you could possibly do it. I mean, let's just call a spade a spade. You're making phone calls. You're instantly getting people to. So you said, I'm not going to do that. I'm just going to be. I'll be happy with my, more than half a loan I'm doing a month, and I'll just continue to write blog posts, and then create that. What you call, if I remember correctly, an Amazon Prime like experience. And the Amazon Prime like experience, from what I remember, is like creating like a predictable process. So like, when did that hit? I mean, obviously 2008, we didn't even know what Amazon Prime was, but like, when did you actually realize that you need to actually have like this flawless, predictable process that people actually knew that they could brag to their friends about, saying, you gotta call Shashank, he is the best. This is what I love about him.
Yeah. So as I got deeper into the industry, I could. There were conversations that happening that kind of got me a little worried. Like things like, I would send a pre-approval letter, and the listing agent would say, well, how good is this pre-approval letter? And I'm like, what do you really mean? How good is this pre-approval letter? And They would say, oh, we get these letters all the time. They will just write a pre-approval letter. We don't even know if the loan will go through or not. So as I started closing more loans, I started having these conversations. I was like, why is that? And one of the biggest things that I started noticing as a pattern is that nobody really believed mortgage lenders or loan officers, whatever. It's like, oh, you issued this pre-approval letter, but that means nothing, because where's the guarantee that the loan will go through? Or you said that the loan will close in 30 days, but where's the guarantee the loan will close in 30 days? Why? How do you know it won't be 35, whatever? And I started noticing this pattern where people were not completely in sync with what the future holds. And every loan officer that I was talking to, they were saying the same thing. It's like, look, Shashank, it's impossible to predict because there are millions of moving pieces in our industry. And how can you say that this pre-approval is a guaranteed loan approval? Or if the contract comes in, you will definitely close in 28 or 30 days. And I'm like, that makes no sense at all. It's like, there are so many little things that people do where there is, you are one lucky dad there.
Oh, that's peanut butter cookies. She's making peanut butter cookies.
Even better.
That's good. I'm sorry about that.
No worries. I was saying is that I did not want that with my consumers. I did not want that uncertainty. I did not want that unpredictability. I wanted something which was very, very predictable. So my pre-approvals in 11 years of being in this business, not one pre-approval has got declined in underwriting. That might just be an industry record, but I brag that to my listing agent saying, look, if you have a pre-approval letter with my signature at the bottom, that means it's a guaranteed loan approval. It's not a 99% chance. It's not a 98% chance. It's a 100% chance that the borrower's loan will go through. Now, if your property's appraisal does not come or your title has a problem, I do not guarantee that. But my borrower knows if I have given him or her the pre-approval letter. So, and then predictability, as you work with your processing team, you work with your operations team, you need to make sure that every step of the way, everyone is on the same page, that if it's a 30-day close, it's a 30-day close, it's not a 31-day close. And again, it's a question of communication. If on day 11 you find out that it won't be a 30-day close, you communicate that early enough and telling them exactly what happened in this case. Maybe the appraiser wanted to get in and for 10 days, the appraiser could not get it, whatever the reason is. So for me, Amazon Prime, as you rightly said, came in much later. But in terms of my mindset of how to do business in the mortgage industry was always about, if it has to be predictable, it has to be near guaranteed process, where until something super exceptional happens, it was completely unthought of, everything should move as guaranteed. And I started doing that. Every time I would send the pre-approval letter, I'll tell them that on your contract, you can waive loan contingency as long as you don't make any changes. And listing agents were, in the beginning at least, they had never heard of something like that.
Of course.
Like you were saying that I can waive the loan contingency. I said, absolutely. You have my pre-approval letter. You are guaranteed a loan approval. And I would do my due diligence if I had to. And that's why I would ask for more documents at the pre-approval stage than anybody else. And sometimes my borrowers will complain. It's like, oh, I went to Bank of America. They did not ask for 2 years of tax returns. Or they did not say, send me K1s or your profit and loss and balance sheet. Why are you asking for it? Is because I told them, it's because I want you to make sure that you don't go there looking for homes for 3 months and 6 months and find something only to find that you don't qualify for this mortgage later. So you better do the work now versus having the disappointment of not getting a loan later. So for me, it became near obsession is that I wanted to build a model. Of course, later on, I started calling it Amazon Prime of mortgages because now there was Amazon Prime. Of course, more people knew about Amazon Prime than my process. But it is very important that we live in the world where we are used to the DoorDash and Amazon Prime and Ubers and Lyfts of the world, where when they say the ETA is 8 minutes or 45 minutes or 2 days, they deliver on it 98% of the time. Yeah. You are supposed to deliver on it because that's where the fintechs will take the market share from you, because they might have better predictability. They might be meeting their ETAs better than you are, because you are the one saying, sorry, I can't commit. I can't commit. There are hundreds of things that can go wrong, so I won't be able to commit that to you. That's your job. That's what you get paid for, to make sure that you commit to it and make sure that all the parties are on the same page.
So do you think that's what's gonna like? That's what makes Arcus and Shashank um, say Invincible, but able to fight off fintech.
Yes, as in if you only do what a machine can do, you will be replaced.
Yeah.
We for a long period of time we thought that chess is a game which only humans can play, and there is no way a computer can potentially even play chess, let alone beat Garry Kasparov. And that happened, and that did not just happen once, that happened twice and thrice, and then there is a game called Go in China, which is considered almost 10x more complicated to play than chess. It's so much a game of a strategy. Then again, it was same thing. It's like, okay, maybe a computer can beat Garry Kasparov, but you can beat a Go master, because there is so much of mental play in that. And then I think the Go master was called G, or I think his name was G. He was beaten about 6 years back, 7 years back by a computer that was built. So we have seen that in the man versus machine battle, the machine has won before, and won in places which were considered very complicated for them to handle. So we should not live in a fool's paradise thinking that somehow what we do is so special and so much more difficult than what, say, Garry Kasparov did or what G did when playing Go. That being the case, we need to build our brand. We need to build our expertise. We need to be an advisor. We need to be a consultant to the borrower. We need to lead with empathy, which is very hard to be replicated by a fintech. Because if all we are doing is giving them rate quotes and say, if they're asking 30-year fixed, you are giving them 30-year fixed. If they're asking no closing costs, you are giving them no closing costs. If they're asking for mortgage insurance, you are giving them mortgage insurance. All you are doing is you're going into your pricing engine, you're going into Optimal Blue, pricing the loan and sending it to them. How difficult that is for Optimal Blue itself to do that.
Yeah.
Instead of you doing it, because all you're doing is just you're entering the number, which any bot can do that. So if you are doing exactly what a basic human machine can do, then you really have a problem. Then slowly your market share will be eaten away. Eventually you will become extinct. But I have personally built a business where I'm very comfortable with the fact that this is a business which I wouldn't say invincible, as in I would not go that far, but really it's fintech proof, so to say, and anyone can do it as long as they work on some of the things that I have worked on. My clients look up to me for advice with everything. As in, sometimes they ask questions that I have to come back and say, which school should I be sending my kids to? Like, I may not be the right person. So somehow you think that a person is good at one thing, that the person must be good at everything. I think it's called the halo effect in psychology, where if you like a president, for example, even if the president does something really bad, you will still think that person is doing a great thing, or any leader or any person. It's called the halo effect. And so you have to build that halo effect as a loan officer or as a leader, where people look up to you for advice for everything, and they are not going to trust a bot for something like that.
Yeah, I agree. And just kind of add on to that, Allison just said this. So true. If you go do what a machine could do, you will be replaced. One of the recurring themes throughout the crisis is we need more humanity, more compassion, commitment, and teamwork. Then next day, I'm going to bring this up because, how do you keep everyone motivated? We're dealing with an unbelievable thing. You always have this very positive outlook, but how do you keep your team? How do you keep your processors? How do you keep your 17 originators? Was it
closer to 50 now?
50?
Closer to 50, yes.
50. So you have 50 originators, and they're not actually all doing like the volume that you have. They all don't have actually that same mindset. So how do you actually keep them inspired through actually all this negativity that's surrounding us?
Sure. By the way, I really like the word compassion when it comes to kind of doing what a machine can do, because of course a machine is not at least as of now, is not compassionate, and that's why I use the word empathy. is because those are the things that you can differentiate yourself in. When a first-time home buyer I'm consulting with, and I tell them that, hey, look, I know that you're anxious. I know that you are unsure. I know that you don't probably know what happens from here on, but I'm here to take care of you just the way I have helped hundreds, if not thousands of first-time home buyers. That's compassion. That's empathy. That's saying that, yes, I will give you all the information, but also I know how you feel right now, and I'll be able to help you with that. In terms of keeping everyone on the same page or keeping everyone motivated, is that you need people to know that this is their business and you have to prove it to them, in the sense that it's very important that people feel ownership in the process. People should not feel that they are doing it because I'm ordering them to do that, or they are doing it because they get paid to do that. I have created a culture where they own the file, or they own the customer experience as much as I do, if not more. And that comes from empowering them with helping them take their own decisions, making them independent. I have, of all the people, it's like what I call independent governance. It's like I'm not governing them. They are governing themselves. So all these processors who are working remote right now, I don't have to monitor them on a daily basis. What did you do? What did you do? What did you do? Because I know that they are managing all of this themselves. And that comes from the fact that if they do make a mistake, you just live with it. As in, I have had people make mistakes, which has costed me thousands of dollars. And even for a second, I wasn't mad at it, even when I did not have, say, more money to spare. It's because it's just part of the learning. Because if you do not make them feel that they can take decisions, and even if it goes wrong, I will totally back them up, then they will, for everything, they will come to you, or they will not feel ownership to the process. When people join my team, one of the first messages that I give them is that I will let you do your own thing. And if you make a mistake, don't worry about it. I have your back. So until everything goes well, it's fine. If something goes bad and you want me to cover for it, I'll cover for you. That gives them the loyalty to the team that you will not see in other places. And that's why my team members are so loyal to the company and so loyal to me and so loyal to the process. And that's why I don't have to do that follow-ups. And that's why I can fund 50 loans a month without me intervening too much, is because imagine if I had to follow up on every file every day. It's nearly impossible to work that. So bottom line really is that you need to empower your team to take decisions. And sometimes when that decisions go wrong, you have to stay with them. You have to have their back, because you can make the same decision and that can go wrong. So you don't blame yourselves. So why would you blame your team members? And when they know that you have that kind of trust and faith, where even they can go wrong and you'll be fine. I have had employees come to me and say, I need to buy this new computer because my computer is laggy. And my first question to them is, what would you do if you were me? Would you say yes or would you say no? And they'll be like, oh, as in, I would say yes, but it's your money. I'd say, if you would say yes, then I would say yes. And next time the same problem comes, just consider it a yes. You don't have to come to me. And so they have that kind of power over decision making, which is what I love most about it, that you can go ahead and even if you lose money, I'm with you. But what that helps me with is that I don't have to take 9 out of 10 decisions. They take it for themselves.
Interesting. And they probably actually are, I guess, more thrifty and responsible because it all falls on their shoulder. And they know actually that, you are not going to fly off the handle. You're going to be kind of calm. And it's interesting actually how you're able to take the emotion out of it, but, still actually be so empathetic. And I think that like in your mortgage process, dealing with actually your borrower or with your loan originators, it's a powerful thing to be able to do that. As Jay Duran just commented, beautifully articulated leadership. So, yeah, agree, man. So listen, I'm what was that?
If it comes from Jay, it must be true, and a huge compliment for sure.
Yeah. Yep, that's right. That's right. That's for sure. So listen, we're through actually this new norm, as we keep calling. you know, we've all found some things that we've never done before. You know, myself, it's, you know, taking my dog for walks 3 times a day. I've never done that. It's like, you know, so what's something that personally that you're doing now that you've never done before?
So I am going biking with my older daughter every day at 5.
That's
So
awesome.
at 5 o'clock, I tell her, okay, you're done with, she gets done with her schoolwork about 4. I tell her, take an hour break, do screen time, do whatever, biking. And then she and I go biking at 5 even I personally wasn't biking every day, but now we just go around the neighborhood. It's not like a super stressful trying to be super fast paced at it, but it's an hour of biking, which is perfect in terms of workout. Just going out in the neighborhood, not being stuck in the home all day. And I'm just loving it. She loves it. I love it. And that's probably when in the night when I sleep, I usually think about 3 things that I'm thankful about or what went right today. And that one thing is always there in one of those 3 things that I was able to bike with her today. And a couple of days it rained, so that was a bummer. But really, that's one thing that I've started doing that I'm probably the proudest and happiest about.
That's awesome. By the way, Derek Haley just wrote, Shashank is the best CEO in the business. Oh, that's awesome. You paid him to say that, literally. That's great. Listen, we're almost doing this for an hour. Okay. We should wrap this up and stop being such chatty catties. But I love your story. I think it's great. I think actually, listen, I think it's awesome that, you know, you're willing to share so much, you know, and share with your own organization and share with MLO Masterclass. I mean, the fact is actually, you know, through MLO Masterclass, you've just taken everything, which I thought you were crazy. I really thought you were crazy when you told me you started to do this and started to take all your things. Like I said, listen, you have your own company. Why would you actually just give this away? And like, what you charge what, like $70 for the thing? So it's not even like it's not even a big money maker for you. But you just love sharing.
Yeah, what I was seeing is that everywhere I was speaking, people would come to me and through Facebook message or whatever, they'll say, do you coach? And so they wanted me to be their coach. And coaching for me, one, will be very expensive because I just don't have the time to do it. And it will probably cost them $2,000 a month or whatever. And I'll probably only do it to 5 or 10 people because I really don't have the bandwidth to do that. And I was like, okay, so I see the need that people want to learn more from me, because when you're speaking, you're up on the stage, you are 30 minutes, 45 minutes, whatever. You can give some of the highlights, but it's very difficult to go deep into some of the strategies. And that's when I would like to thank Barry Habib for this, because he was kind of he kind of pushed me into doing this after seeing me speak in Austin, is that, hey, you should be creating something where more people can see how you did this. Every single thing that you do. So he was an inspiration. It was in my head that I wanted to reach out to more people versus just coaching like 5 or 10 people or a handful of people. And that's when the idea of MLO Masterclass came in, which is basically a collection of all the training in terms of everything that I have done over the last 10 years and I still continue to do, which makes me a 200 million producer from. And it's not just mortgage specific training where how to get more real estate agents and how to get more borrower referrals, and all of that is great, but also a ton of skills which is not really mortgage related. As I talk a lot about psychology. How do you persuade people to kind of, how do you influence people? How do you persuade people? What are some of the sales and marketing techniques which can work in any industry and even in personal relationships, really? So I've not just taken everything on the mortgage side, but everything else, which I personally think separates the 99% from the 1%, which is more mindset, which is more psychology, more little bit of difference that just the strategy. And all of that went into MLO Masterclass. A lot of work, really, and I'm still, in fact, just before this call, I was interviewing Ben Johnston, was talking about how he's using Instagram to make a killing, and that's on MLO Masterclass, just went live 5 minutes back. So it's not just a one-time content which is there, but I mean, regularly, all the blog posts that I wrote was given to my members. All the new trainings that we are doing, that's going there. A ton of calls with Barry himself that I've put in there. But really, my goal is to bring in everything that a loan officer would need, whether he or she is starting today or have been in the business 20, 25 years, and take their business to the next level for really the price of what? Less than a latte a day. It's because I wanted it to be more affordable and wanted it to be more far-reaching than just me coaching a handful of people.
Shashank, would you mind if I throw your email address up on here, just if anyone wants to get a hold of you, specifically, that blog post. If I'm gonna put your Arcus email address up here. So actually, if you're watching this, you'll see in the bottom right under Shashank, there's his email address. We'll put a link actually, in the comments here to that blog post. So if you want to get a hold of it, because it's just a great resource. It'll give you some great things to share. And if you want to get a hold of Shashank directly, learn a little bit more about MLO Masterclass, or just ask him anything. He's a very, very approachable guy. Just know he's probably going to downgrade your conversation. If you email him, like one of his greatest ideas about saving time. Can I share this? Do you mind if I share this?
Go ahead.
Downgrade the conversation. So and it sounds crazy, but especially if it's dealing with a borrower or something like that. But if it's like a vendor or someone actually that you don't necessarily need to spend them. If they want to meet you in person, you say, how about we do a Zoom? They want to do a Zoom, you do a phone call. They want to do a phone call, you do actually, hey, why don't you send me an email, and then tell me a little bit what you're looking for so I can make sure I get back to you, right? Is that pretty much a good synopsis of downgrading the conversation?
Yeah, but don't tell them you're downgrading it. But the way you make it sound as if you're doing it in their benefit. Yeah. So you're saying, I want to have a phone call with you, and you say, why don't you send me an email first so that I know the background, so that I'm better prepared. And most of the time, you can just respond to the email, and that conversation is done. You never have to get on the phone call, and that saves me literally probably 3-4 hours a week just by downgrading the conversation from in person to a Zoom, from Zoom to a phone to an email, and sometimes just ignore it. Maybe you don't even have to respond to all the emails.
Wonderful. Fantastic. All right, Shashank, thank you so much for spending your time with us. I really appreciate it. I know you've got your family there. You've got a ridiculous amount of originations to still do for this month. You've actually done more in the last week than most originators are going to do for the entire year. So it is phenomenal. But you make it actually like a very easy paint by numbers way to be able to do it by either actually connecting with you on a personal level or obviously doing it actually through MLO Masterclass. So Shashank, thank you so much.
Thanks, Andrew. Thanks for having me.
All right. And I'm Andrew Berman. Thank you for watching another Mortgage Leadership Outlooks the series. Tomorrow, please join us tomorrow. We've got Carl Markman from Redmond, old friend of mine. He's got some great messaging that he's sharing out there. I think you're going to be very, very excited. It's real. There's no filter on Carl. So he's going to share it with you, whether it's ugly or bad. So thank you, everyone, for watching. Really appreciate it.